Hello guys, welcome again to another BTC video. I hope you are doing great today. Been a long time since my last BTC video. Been kind of busy with a lot of personal stuff going on, but I'm back. There's a lot of interesting things in the chart that need to be discussed. So I'm here with a new BTC video, so stay tuned and follow through, watch till the end because it's gonna get very interesting. As always, like, share, and subscribe. It means a lot to the channel if you can help it grow. So let's get started and let's talk about BTC. I'm not going to dive too much into the micro. I'm going to be talking more about the macro because I think it's a little bit more important right now. But let's just start and hopefully you will get what I'm seeing in the charts. So first thing off, if you follow me on Twitter and if you're part of my Discord, you probably know that I said that we are in a prolonged bear market due to two things basically. One of these things is the monthly EMAs crossing bearish, and the second one is basically the financial and economical worldwide situation that's going on around us. You know, inflation, a lot of people losing their jobs, etc., etc. So one of them is still a constant. One of them is not changing. You know, the economy is getting worse and worse, and we're just starting. Okay, so it's still the same. The other thing that would change is the monthly EMAs, right? This did change. We're bearish here and they crossed bullish right now here. But if you're part of my Discord and if you follow me through, you will know that this is not important. It is okay, but it's not important. And I'm going to explain why. This is the daily time frame for BTC, just to give you a quick example. And yes, I know there are different time frames. They're unrelated to each other. The higher, the better. But I just want to give show my point of view. So these monthly EMAs cross bullish right here. We formed the triple top formation and then we dropped. So one would assume that we were bullish here, but then finally we were not. Okay, and this could be seen throughout. So same thing here. One could assume we were bullish here and then we're not. One could assume we were bullish here and then we're not. So what did we learn from this lesson? And this is something that I discussed on Discord as well, and I talked to my Discord members about it a couple of months ago. I said one of the main requirements to be in a bull run is breaking the monthly EMAs and holding them as support on the macros, weekly, monthly time frames. If you're not holding them as support on the retest, you're basically screwed. It's just a fake out, and then this goes down, and you drop to the bottom of the range again. So right now, what is important is them holding. The monthly EMAs right now are between 28 and I would say 27.5. All right. So that area, which also is in confluence with the trend line, by the way, which is this nice, beautiful trend line. I can adjust it a little bit more as such. No, a little bit more. Let's make it more accurate and more precise. All right. So this trend line right here is in confluence with our level, with that 28, 27.5 level. So add to that we are in a weekly correction. I posted a couple of days on Twitter. I think yesterday I posted that I think we're still in a correction on the weekly, and the correction is not over, but we need a long squeeze first. We need to a short squeeze first. We need to decimate the shorters and then go for the longers after, because there's a lot of people who longed here, probably didn't take profit, and there were a lot of people who were shorting here, probably didn't take profit. So the market is going to do a double whammy. That's what I call a double whammy, right? So bam, liquidate longs, bam, liquidate shorts, and then the market takes its direction after. So we are due for a weekly correction, and most likely this weekly correction is probably heading towards that monthly EMA zone. Holding them is great, but holding them is not enough. We need to hold them and then start moving. We don't need to do this. So we don't need to do, hold them and do a double top and then, or hold them in a triple top and then drop. We need to hold them and move. We need to hold them and move something similar to this. Hold them and just bounce, super bounce. We don't really need double tops, triple tops. We don't need consolidation. We need monthly closes holding above the monthly EMAs, and then we need monthly closes to just start moving and break this beautiful resistance area that we have right here. We get a monthly close above 31.3, and I think we're set for 40K. Now at 40K, I don't want you to get too giddy and too happy because I think there will be a strong correction there. but most likely we will be in the early stages of the bull run with a strong correction coming after, and then a continuation upwards, something similar to this. The bull run started here, you had a very strong correction, 72%, and then you kept going. So that would be probably the best case, whether we're at 40 or whether we're at 30 as well. Because believe it or not, the bulls have a good chance right now. By that I mean, even if we lose the monthly EMAs, it's not over for the bulls yet. Why? Because this could be an easy wave one, and I think it is, by the way. I think this is an impulsive wave one, and usually followed by a wave two. Now wave twos are tricky. Let me just put this up here. Don't mind 3 and 5. I'm just gonna put them off screen. Wave twos are trickies because wave twos usually retrace anything between 0.5 to, like, I would say 90% retrace. All right. So if we take that into consideration, so we're either gonna go to the lower end here, this of the orange box, which is around 23.5, which is great. It is an area of support as well. If you can see it here, right there, this is an area of support, this orange box. So either we go there, we go to the orange box, which is the 0.5, or even enter the golden fib as well, the golden pocket, and then start moving up with our super impulsive wave 3. And this will take a couple of months, by the way. It's not going to happen overnight. It's probably going to take a few months, right? So either we do that, if we lose the monthly EMAs, if we lose this beautiful trend line, then most likely we either go here or we go to the bottom of the range, something similar to this, which is around a 90% retrace. So here, for example, it retraced almost like 95%. And this is typical of a wave 1, then a wave 2, and then super wave 3 comes after. So we can have that. We can have a wave 1 here, a super wave 2 retracement, go do a huge double bottom formation. Let me just show you how it will look like. So do like this, double bottom formation, and then start move up. And that will form 2 bottoms, and then we go super impulsive wave 3. So as you can see, the bulls are still okay. Even if we lose the EMAs, even if we lose this, we're okay. The problem will only arise if we lose 15K area. And if we do lose it, we're probably going to bounce somewhere here. So probably going to go to 10K, because I would assume that the correction will probably come at the end of the year. And at the end of the year, you're around 10K, as you can see here. 10, 11K. But if that happens, this is a confirmation of a prolonged bear market, 100%. Because that would mean that you did a low here, a high here, a lower low, a lower high, and then another lower low, and then you form some type of bullish downward, inclining downward channel, and then you super burst, and then the bull run resumes around here. All right, that's the bearish scenario. Everything else is bullish, but to a degree. So this is bullish, but at the same time, this is a 30% correction, and the other one is a 45% correction, which will decimate all else as well. And the bearish scenario was probably a 72% correction, something very similar to what happened here. The difference between this and this is that here you didn't lose the low, the previous low. You actually did a huge double bottom as well. Double bottom, and then you moved up. If we do a 72% correction here, you form a new lower low. And that's very, 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 very bad for the bulls and very good for the bears. Regardless, what I can say for sure from my point of view is that we are in a weekly correction, which is not over. I posted yesterday on Twitter that the longs needed to be, the shorts needed to be liquidated, and bam, it happened towards 30K. And I also posted that the correction is still not over, and I think it's not over. In this couple of days, we will see. And I believe that, I don't want to jinx it, but I don't think we hold a trend line. All right, I don't want to jinx it. I'm assuming too much. I'm a guy who likes level by level, but I don't think we hold the trend line. Now, what can I guarantee is not guarantee, but what am I confident in saying? I'm confident in saying that we're gonna probably retest 28 to 27K area. I've been saying this on my Discord for quite some time, if you remember. We're probably gonna retest that area. We lose it, we have two areas in my brain for the bulls. Either this area right here, which is 23,800, around that area, or a low around 16 again. And that's the bullish case, by the way. Bearish case is we lose 16. All right? And bullish case is obviously to a degree, because that's a 50% correction as well if we go here. And if we go here, it's a 33% correction or 30% correction. So both are, bad for the bulls, but it's not the end of the world. All right? The best case, obviously, for the bulls is just holding the trend line, maybe wicking below it, and then holding it, forming some type of ascending triangle here. Just let me remove this because it's looking like an ascending triangle, right? Forming some type of ascending triangle, and then bam, burst. That's the the best scenario for the bulls out there. And then you invalidate the whole double top, and then you start moving up. The only problem that I see with this is that, well, this is no longer a wave one, because you didn't really have a retracement. I mean, the retracement that you had, I mean, it was here, and it was to the 0.382, so it's not really a retracement. Again, the more data, the more we will analyze more. But for just to make it very simple and to summarize, the bulls have three scenarios for them, each worse than the other, obviously. The best case is holding the monthly EMAs and moving. We don't want consolidation. We don't want double tops, triple tops. That's not good. That just means stronger correction coming, right? But the best one is that, holding that 27, 28K region and then moving on the monthly and on the weekly, all right? Daily, on the micros, we can do whatever we want. It's not really important. The second best scenario for the bulls is basically going towards 23,800, forming some type of double bottom here, going to that golden fib, doing a wave 1, wave 2, and bam, super wave 3. Which I also don't see that is likely, by the way. And the worst case scenario is basically going towards the low here, near 16, 17, forming some type of huge double bottom, and then super moving. And that's the most likely scenario, in my opinion, for the bulls. Like I said, I don't want to jinx it. I'm assuming I usually like it level by level. So lose 23,800, then I would say, okay, I'll see you at 16, guys. Lose 27, I'll see you at 23,800. I play it level by level. So those are the the best case scenarios for the bulls in order, all right, from best to worst. Now the bearish scenario will come when we lose 16K. If we lose 15K, most likely we're gonna head to 10K, and we're probably gonna enter a prolonged bear market that will probably last till 2026 or something along those lines. All right, it depends on how long. So I could give you a rough estimation if you want, but it's not gonna be accurate at all. It's not gonna be at all accurate. Let me flip this. Can I flip it? Yeah, I can flip it like that. I don't really care about the shape. What I care is about, yeah, so yeah, like 2025-ish, around that. 2026-ish we start moving. So yeah, that and it's very easy to catch the new low if we do lose 15K. Whether it's going to be somewhere along this trend line. But again, I wouldn't really be too happy with it if it happens, because I've talked about this on Twitter before, and I have a nice post about saying when the price goes here, the bull run boys are going to come out. And then, oh, we told you, bull run coming, whatever. And when the price goes here, the 10K people are going to come out. And they're going to say, yo, buy. Yeah, it's, it's over. Correction, new low. Here's the bot. And I told you that the real buy zone will be probably lower than that. All right? And I still believe that will be the case if we see this scenario. Only time will tell. This is going to take months, by the way. We're in August now. I'm assuming the big drop will probably come end of year. Hopefully we're not here by end of year, because if we're here, then this is going to go down lower. All right. On the micro, we are due for a correction. Simple as that. I mean, I'm hoping to get one more tap of the top so I can short it. I was sleeping when this happened, even though I posted the scenario, and if I was awake, I would have taken the trade 100%, no questions asked. I'm hoping to get, some type of double top formation, something similar to, let me just show you what I want so you guys can understand. Something similar to this. I'm hoping for that, with the second top being close to the first top and the first top being at 30K. So I'm hoping for that. If we don't get that, we're probably going to ride this down, all the way down to 27, 28K from where we are right now. So that's the micro. On the macro, and weekly correction coming. On the macro, already three scenarios for the bulls from best to worst. Best one is holding the monthly EMAs and moving. We don't want consolidation. We don't want triple tops, double tops. Second best scenario, going towards 23,800, forming a double top here near the golden fib, and then moving with the impulsive wave 3. Third worst case scenario, and that's the most likely in my opinion that's going to happen. But again, I don't want to assume too much. Level by level, guys, right? But if you would tell me to put my chips on something, I would say that would be the best case scenario for the bulls right now. And that's the most likely one that will happen, which is basically lose 23,800 and go towards the lows, hopefully holding them and then moving with an impulsive wave 3. If we cannot hold this, bulls step aside and bears come in, and welcome to a prolonged bear market with many months of ups and downs, between 25 or 23K and the lows. Who knows? We could go all the way down to easily towards I would say 6K. I think 6-7K easily. And that's where, if we see that, that's where I'm gonna sell my kidney to buy BTC, because I don't think it drops lower. I think people will be too scared to buy there, and that's where I'm gonna start buying. We will wait and see. We'll have to wait and see. That is my analysis for today, guys. I hope you enjoyed it. Like, share, and subscribe. It means a lot to the channel. It means a lot for the channel. If you can help me grow, it will motivate me to give you more content. Follow me on Twitter. Link in the description below as well. If you want to inquire about my Discord, which now has my personal signals, my admin signals, copy trading, spot signals, TA, whatever. Link in the description below. You can message me on my private Telegram and I'll give you the instructions on how to sign up. And we have a very special promotion for old members and existing members. So be sure to check it out via DM or just going on the Discord and checking out what's new. Would appreciate if you can support me as well by signing up with one of my referrals below. Thank you again for watching the video, guys. I hope you enjoyed it and I hope you have a nice day. See you again next time.